Welcome to the Deep Dive. Today, we're really getting into something pretty significant in the crypto space. We're talking about the recent SEC charges against this investment platform, Unicoin, and, well, several of its top people. The claim is huge. Over $100 million raised from investors based on what the SEC is calling fictitious promises.
Exactly. And the heart of it really seems to be this claim that Unicoin seriously misled people about what was actually backing their crypto assets. You know, the big pitch involved billions, literally billions, in real estate holdings. But the SEC saying, hold on, that's not quite the reality. So yeah, our plan for this deep dive is to break down these charges, figure out who's involved, and think about what this might mean for crypto overall.
Okay, let's get into it then. So these charges, they were announced May 20th, right? And it wasn't just the company itself. The SEC named names. Who are we talking about here?
Yeah, they did. The main parties charged are Unicoin, the company, its CEO, Alex Konanykhin. Then there's a board member, Silvina Moschini. Also the former investment chief, Alex Dominguez. And interestingly, the general counsel, Richard Devlin.
Right, the general counsel too. And these allegations, they seem to focus a lot on these things called rights certificates.
Yeah.
What were those exactly? What were people actually buying?
So these certificates were basically like a promise. They represented an investor's right to get Unicoin tokens and also company stock later on. The SEC's argument is that what Unicoin told investors about the value and, crucially, the backing of these certificates was, well, false and misleading, materially so.
So not just hype then. The SEC is specifically going after those claims about the huge real estate portfolio. What more can you tell us about that specific part?
Precisely. Mark Cave, he's an associate director in the SEC's enforcement division, he didn't mince words. He said these execs, quote, exploited thousands of investors with fictitious promises about this, supposed international portfolio of valuable real estate. And here's where it gets really specific. He claimed the actual real estate was worth only a mere fraction of what they said, a fraction. And get this, that most of the sales of these rights certificates were illusory.
Illusory. Wow. That implies, they weren't even real sales in some cases.
It certainly suggests a massive gap between the marketing pitch and the underlying economic reality, a really significant disconnect.
That is serious. And this isn't just a slap on the wrist, is it? They actually filed a lawsuit.
Oh, yeah. A formal complaint has been filed in federal court down in Manhattan. And the SEC isn't holding back on what they want. They're asking for permanent injunctive relief, basically stopping them from doing this again, and repayment of all the allegedly ill-gotten gains. Taking it to federal court like this, it really shows how seriously the SEC views these alleged violations.
Okay, so beyond the whole real estate thing, which is huge, were there other ways the SEC said Unicoin was misleading people? What else is in the complaint?
Yeah, there are other key things. For example, the SEC says Unicoin misrepresented its own financial health. They apparently told investors they had, decades of financial runway, plenty of cash to operate for years. But the SEC claims the reality was often less than a year, and sometimes as short as only 4 months of operating cash left.
That's a massive difference. Decades versus sometimes just months. That really changes the risk profile for an investor, doesn't it?
Absolutely. A company claiming it's set for the long haul versus one potentially running out of money soon. Very different scenarios.
Mm-hmm.
And it wasn't just the runway. There were issues with reported sales figures, too, according to the SEC.
Right. What about those?
Well, the allegation is that Unicoin claimed they'd sold over $3 billion worth of these rights certificates, but the SEC says the actual number was much lower, around $110 million.
$3 billion versus $110 million. That's not a small discrepancy.
Not at all. Inflating sales like that could, create a false sense of momentum and investor confidence. And one more thing. The SEC also alleges Unicoin falsely claimed their tokens and certificates were registered with the SEC. For many investors, seeing SEC registered might imply a level of, legitimacy or oversight that apparently wasn't there.
Okay, now let's circle back to the general counsel, Richard Devlin. His name kind of jumps out because he was charged, but the outcome seems different. What happened there?
Yeah, that's an interesting part of this. Devlin was charged with violating federal securities laws, just like the others. However, he settled with the SEC. He agreed to pay a civil penalty, $37,500. But here's the key part, without actually admitting or denying the SEC's claims.
So a settlement but no admission of guilt. What does that usually tell us?
Well, it can mean a few things. For Devlin, it avoids a potentially long and costly legal fight. For the SEC, it secures a penalty and closes that part of the case. It doesn't necessarily reveal the full picture of his involvement, but it does suggest the SEC believed he played a role, enough to charge him and secure a settlement. It raises questions about, the responsibilities of legal counsel in these crypto ventures.
It definitely does. Now, shifting back to Unicoin itself and the other executives, Konanykhin and Moschini, have they said anything? Have they responded to these pretty serious allegations?
Well, as of the time the news broke, there wasn't any immediate public comment reported from Unicoin or from Konanykhin or Moschini. And apparently Dominguez, the former investment chief, was also difficult to reach. It's pretty common in these situations, for the accused parties to hold off on public statements while they figure out their legal strategy.
Makes sense. But there was some earlier sign of trouble, wasn't there? Something about a prior run-in with the SEC, a Wells notice.
Yes, exactly. That's important context. Eleanor Terrett, who used to be with FOX Business, reported back in April that Unicoin had actually received an SEC Wells notice. That was way back in December, apparently related to a token airdrop.
And a Wells notice is basically like a warning shot, right? The SEC saying, we're probably going to sue you.
That's a good way to put it. It's a formal notice from SEC staff saying they've preliminarily decided to recommend enforcement action. It gives the recipient a chance to argue why they shouldn't. And apparently, after that Wells notice, the SEC then requested a meeting on April 18th, seemingly to talk about a possible settlement.
Okay, so the SEC tried to settle before filing charges. And Unicoin's reaction to that?
Well, according to what Konanykhin told Terrett, Unicoin actually declined that meeting. He apparently said some of the SEC's requests for the meeting were unacceptable and, significantly, that Unicoin planned to fight the case in court.
So they knew this was likely coming and decided to fight rather than settle beforehand. That's quite telling, isn't it?
It certainly suggests they believe they have a case, or at least that they weren't willing to agree to the SEC's terms at that stage. It signals a clear intent to contest the allegations.
Okay, so this didn't come completely out of the blue. There was this prior friction. Now, let's maybe zoom out a bit. How does this specific case, this Unicoin situation, fit into the bigger picture of crypto regulation? What's the vibe right now with the SEC and crypto?
It definitely fits into the ongoing narrative of the SEC actively policing the crypto space, particularly, focusing on platforms making claims about asset backing, financial stability, and registration status. This case sends a pretty clear message, I think, that the SEC is watching for misrepresentations and is prepared to bring enforcement actions when they think securities laws are being broken. And interestingly, timing-wise, this is happening as we're apparently expecting the SEC's crypto task force to release its first report soon. So maybe more coordinated action or clarity is coming. Hard to say.
Right. And there was also that mention of a magazine article discussing a potential SEC U-turn on crypto. Does this case reflect that or contradict it? How does it connect?
That article, SEC's U-turn on crypto, leaves key questions unanswered. Probably touches on the broader debate about regulatory clarity. Sometimes the SEC stance seems complex or maybe even shifts on certain crypto issues. But while there's that wider discussion happening about the overall framework, this Unicoin case seems more straightforward, at least from the SEC's perspective. It looks like a classic enforcement action targeting alleged fraud and misrepresentation under existing securities laws. So you could see it as the SEC doing its core job, even while those bigger questions about crypto regulation are still being debated.
Okay, that makes sense. So if we were to boil down this whole deep dive on the Unicoin charges, what are the main things you think our listeners should really take away?
I think the absolute key takeaway is that the SEC has brought serious fraud charges against Unicoin, its senior executives, and even its former top lawyer. The core allegations are about fundamentally misleading investors, particularly about that real estate backing, but also about the company's financial health and how many sales they'd actually made. We're talking about a lot of investor money here, over $100 million alleged. And it really highlights the SEC's continued focus on trying to ensure some level of truthfulness in this market.
Yeah, definitely not small potatoes. And for you, the listener, we really hope this deep dive gave you a more thorough understanding of what's going on here beyond just the headlines. It's a pretty significant event in the crypto regulation story.
Absolutely. It serves as a stark reminder, really, of the potential risks involved in crypto investments and, the ongoing efforts by regulators to protect investors and demand transparency.
So maybe a final thought to leave you with. Considering these SEC actions against Unicoin and just the general uncertainty sometimes surrounding crypto regulation, what does this mean for you? How should investors approach checking things out, doing their due diligence in this market? And looking ahead, how might cases like this actually influence future rules and the way crypto companies have to operate and talk to their investors? Definitely something to keep thinking about as this whole situation develops. Thanks for diving deep with us today.